Bollinger Bands. One of the most actively used technical indicators among Forex trader is Bollinger Bands, which are used to measure volatility and look for entry and exit points. So let's set it up on our charts and we can run through this step by step to add the Bollinger Bands to your chart. Click on Indicators at the top of the screen and search for Bollinger Bands and then click on Bollinger Bands. The middle line is the moving average with upper and lower bands. Let's look at an example of how you may be able to identify entry and exit points using Bollinger Bands. A potential entry point can be set up when the price of a security falls below the lower band. Here, a trader might wait for the price to close back above the band before entering the trade. This is a form of confirmation when applying mean reversion strategies. A reversion to the mean is complete when the security rises back to its moving average. Some traders use this as an exit point. Others might target the upper band as an exit point, which is typically a bigger profit target and can take longer to achieve. Traders using the upper band as a target might look for confirmation by letting the price move above the upper band and then waiting for a close back below the band before exiting a trade. The idea is that a break back below the upper band is likely to revert to the moving average. Some traders look for additional confirmation by considering the slope of the bands. Put in simple terms, if the bands are sloping up, then the trade is in a potential uptrend. Conversely, if the bands are sloping down, then the trade is in a potential downtrend. So, by referring to the slope, some traders might only take entry points in uptrends and ignore entry points in downtrends. Timing entry and exit points in these ways is one of the main benefits of applying Bollinger Bands.